Good morning all. Welcome to this webinar, Off-Payroll Working IR35 Rules in the Private Sector. Are you ready? Or what you need to know about IR35. We'll give it a minute to allow everybody to connect. And in the meantime, could I ask you to just answer this poll question, which is about to pop up. This will give us an opportunity to gauge the level of understanding of, right now, and we'll check again at the end to ensure that the session has been effective. If you've got any questions as we go through the session, please use the Q&A button and we'll answer as many as possible at the end. We've got quite a number in the audience today, so we will at least look to pick representative questions and address as many as we can. Okay, so I think the majority of you answered that, so I think we're ready to go. Welcome to today's webinar, brought to you by Bird & Bird, a top 20 UK law firm and a truly international presence with more than 1,300 lawyers in 29 offices throughout Europe, Middle East, Asia Pac and North America. They're joined by the Giant Group, a leading service company providing specialist end-to-end workforce management software and solutions for the last 30 years. Our subject is off-payroll working, the IR35 rules in the private sector. Are you ready? The purpose of the event is firstly to make you aware of the changed responsibilities for all parties under the revised rules, then to describe the potential implications in terms of the risk and cost, and finally to outline the options to address these requirements. Our keynote speakers are from Bird & Bird, firstly Zoe Feller. Zoe is a tax lawyer specialising in corporate, asset finance and structured finance transactions. She worked with UK and international companies to put in place the most effective business models to ensure their brand will thrive, and has great hands-on experience in fintech and the traditional banking sector. Alongside Alison, she's been leading Bird & Bird's work on IR35 and has advised a number of clients on their contractor assessments over the last 18 months. Also from Bird & Bird, we have Alison Dixon. Alison is a partner in the International HR Services Group with more than 15 years of experience advising clients on complex employment law issues. She's based in London and works on the full range of contentious and non-contentious issues. Together with Zoe, she's been heavily involved in advising the firm's clients on their preparations for the new off-payroll rules. She's also a regular contributor to Bird & Bird's frontline employment law case update publications. So between Alison and Zoe, I think we've got this covered A to Z. Okay. So from Giant, we have Dan Haslam. Dan is Group Sales Director, and his role includes helping clients to manage their contingent workforce compliantly and cost effectively, using the whole range of Giant's services and products. I'm David Hopkins, a workforce management consultant with Giant, and I'll be the chairperson for this session. The format is going to be based on a number of questions which Zoe, Alison and Dan will address to give us a full view from a legal and practical perspective. There's an opportunity to ask questions at the end, so please submit them as we go through this formal session. Just a couple of final points. Please do finish completing that poll question. I can see most of you have, but please do that. We are broadcasting remotely today, so apologies in advance for any sound or technical issues, but we seem to be okay at the moment, fingers crossed. So let us begin. Zoe, if I may start with you then, would you please just recap on what these changes mean for end users and others in the labour supply chain?
Of course, thanks very much, David. I think there are three main parts to the change of the rules. The first thing that's happening is that the emphasis or the requirement to assess employment status is moving. At the moment, PSCs are required to make an assessment as to employment status, and that's moving to the end user. And so end users are going to be required to look at the underlying relationship between employee or between the contractors and their business and work out whether that's one of deemed employment. The second change as a result of that is that the person making a payment to the PSC, and that's either going to be the end user themselves or an agency, is required to operate PAYE and NICs on that payment if the contractor is a deemed employee. And the final important point is that end users are required from the 6th of April 2021 to issue status determination statements to any PSC contractors, and they've got to be able to pass that down the chain, and there's all sorts of requirements regarding communication up and down the supply chain to ensure that everybody gets the information that they need. And obviously, as a result of those SDSs, you need to have in place an appeals process as well if any contractor doesn't agree with the status determination that you've given them.
Okay. So if we know who this affects then, Alison, what approaches have you seen taken by businesses preparing for these changes?
Yeah, I mean, interestingly, I think it was the big banks that first sort of broke cover well over a year ago, and you know, Lloyds, Barclays, HSBC, they all took a very, very risk-averse approach to this new legislation and essentially said that they were no longer going to use PSC contractors at all. So not only ending any direct PSC contracting arrangements, but also you know, issuing contract amendments to all of their suppliers, effectively pushing that requirement down the supply chain, requiring their suppliers not to use PSC labour for the benefit of those banks, and absorbing all the financial risk associated with the use of PSCs in that supply chain. And then we saw a knock-on effect of that, which is that, you know, other businesses that had big financial services customer base fell into line with that approach. And so there's been a kind of ripple effect through that supply chain, and you know, that's the easy option really if you've got the negotiating power to do that. But most businesses that we've talked to and advised have taken a much more balanced approach. They've recognised that there will be scope for engaging genuinely self-employed contractors under the new legislation, and they want to continue to use contractors in that way because it's an arrangement that works for both parties. And obviously for the big organisations in that category, it's been a really massive undertaking. They've had to do their due diligence, work out who their contractors are, where are they in the business, make the assessment of deemed employment status, work out how to address those contractors who are likely to be deemed employees, what to do with them, work out solutions and develop onboarding processes for the future for new contractors. And also, you know, discussing and negotiating an approach with their labour suppliers as well. So it's been a big undertaking. And I think that for many organisations there will still be work to do.
Yeah. So when these changes are being made, Alison, what are the main pitfalls for businesses to avoid?
Yeah, there are a few, as you can imagine, with a big, large-scale compliance project like this, and some sort of hurdles to getting started as well. And many of those have arisen from the fact that I think historically, in a lot of organisations, PSC contractor arrangements have been viewed as low risk, low value commercial agreements. And there isn't central oversight or control over the engagement of contractors historically. So one of the implications of that has been that there hasn't been much ownership of the compliance process. Is it procurement that's supposed to deal with this? Is it HR? Is it the legal team? Is it finance? I mean, I think everyone has a role to play, but that has caused delays in some organisations because the responsibility has kind of fallen between all of those stools. And another kind of consequence of that has been that some businesses have found it difficult to find all their contractors. There is no central HR database of these people in a lot of organisations. And businesses don't just have to look at their directly engaged contractors, they have to look at all of their labour supply arrangements and potentially also arrangements that they thought were outsourced services but are actually labour supply. So there's a kind of a big due diligence piece at the outset that I think can be underestimated in terms of the amount of work and time that's involved. The other thing is, I think, once you're kind of into the process of making assessments, that it's too easy to take a contractor's word for it as to the way their working arrangements work in practice, and you know, it's in a contractor's interest to answer questions in a particular way to ensure that the outcome of any assessment is that they are not a deemed employee and that they can continue to be a PSC contractor. And I think that also goes for the managers that want to engage those contractors. In many organisations, you know, the tax risk will be central, you know, it rests with the organisation as a whole, but the budget for engaging these types of contractors sits with a local manager who wants to engage someone at the cheapest price in the way that suits both parties from their perspective. And so I think, you know, a lack of control and oversight over the process of assessing deemed employment status is a potential problem. So there needs to be quite close scrutiny of that. Yeah, those were the main ones. There are plenty of others, but yeah, those are the key ones that I think we've seen.
Dave, I was just going to add into that. I think, Alison, my experience practically is just like you echoing everything that you've just said there in terms of all those pitfalls. I think when you're talking to a client about the contingent workforce, just to be able to answer the question of how many contractors do we engage is a fundamentally tricky one, because, as you say, they're usually coming in from all over the place, and very rare do you see a business that's got a register of them or some sort of HR approach which actually collect where all these contractors are. So I think that's tricky. And also as well, I think you were spot on when you mentioned about that sort of profile of risk versus cost as well. So businesses have got to think about where they think they are in that spectrum. Do you want to take a low risk approach, a la the financial services industries, or actually are you going to do something a bit more sophisticated? The rub of being really risk averse means that's been expensive for you, basically, if you've got business critical contractors there who you might lose. So trying to figure out where you are on that spectrum is important. And as you say, on assessments, when you've got hiring managers sort of pulling those strings with a vested interest in trying to keep the contractors on board, doesn't necessarily lend itself to a balanced, reasonable care approach and truthful information on an assessment. So trying to get all parties involved in that assessment process is a good idea. So you would clearly having the same experience at Giant as you've seen in the wider market.
So pulling a couple of things out of that, then you've all mentioned assessments there, and the term reasonable care, which is something that HMRC talk about in terms of following due process for employers. So when it comes to those assessments, then perhaps I can ask you first, Zoe. What have you seen in practice as you've done assessments with employers around deemed employment status? Have there been any patterns emerging, particularly in terms of the proportion of total contractors who are deemed and how that process goes?
Yes, it's been really interesting looking at our contractor base, the contractor basis of our clients. I would say that this time a year ago, we were looking at doing those assessments, 90% of the contractors were probably deemed employees. And so that's led to some very difficult conversations. I mean, I'd say at least 90%, because what that really means is you're not going to be issuing status determination statements to 90% of your contracted workforce. You're going to be changing the nature of their arrangements. You're going to be moving them onto PAYE or moving them to umbrella companies. You do not want to have 90% of contractors receiving status determination statements that they are deemed employees. So that's been a really, it's been a wake-up call, and we were seeing that from the very beginning with quite how high a proportion of contractors really were deemed employees. And I think that's reflected in what HMRC were expecting to see as well. They said in 2017 that when they introduced the rules for the public sector, that in the first year after they introduced the rules for the public sector, they collected an additional £750 million worth of income tax. So HMRC are clearly expecting a lot of people to be changing their employment status as well as a result of these changes. The other thing I would say as well is that I mean, that there is a corollary to that, which is we have some clients where they've got absolutely no deemed employees at all. And I do think it varies from sector to sector, how they use their contractors, and what kind of contractors they use. So we do have one client where they haven't had a single deemed employee, but I would say in general, the number is closer to 90%.
What's been your experience? What's been Giant's experience, Dan, of this?
Yeah, I think it's really difficult to talk about this as a sort of general macro trend. I think when HMRC, obviously when they're looking at the market, they're very much looking at the overall market macro, and I totally would agree with Zoe that when you're looking at that scale, then HMRC probably aren't too far off. Some would argue it's maybe more like 70-30, 80-20, but it's certainly the vast majority of contractors out there would look like deemed employees. But industry is massive, is a massive factor in that. So if you look in the IT space, for example, where there's a lot of statement of work type approach and contractors coming in to provide very clearly provide services, then in those arenas, then it absolutely looks the reverse, and most would be deemed outside. So I think sector's key. I think the other thing as well is, when you look at public sector in 2017, it may not be common knowledge to many people, but the huge amount of usage of PSE contractors in things like nursing, which nurses should never be anywhere near operating via a limited company. Teachers getting paid through limited companies. It's this big swell of non-compliance was rife in there, so it made sense for HMRC to tackle public sector first, and now look at private sector. In private sector, you've got lots of low-paid workers actually getting paid through limited companies. Nothing to do with IR35, but often there's a payroll mechanism being used there, which is to try and avoid national minimum wage and other sorts of rules. So it's a very cloudy sort of view out there. Different industries lends itself to different areas. Majoritively, I would agree, probably 80-20 sort of definitely should be looked at as deemed inside, but it'll vary by client. And I think also as well, some clients are just also completely bamboozled by the vagaries of IR35. I mean, frankly, no one really knows until it's sat in front of a tribunal as to what that decision is that's going to be made. And because it's such a complex area, I think you can understand why a lot of businesses have taken the view just to say, actually, do you know what? This is complicated. We're going to take a risk-averse approach. We're going to follow the thread from the banks, and we're actually going to circumnavigate this whole debate around what an assessment should be around, and this whole tricky area of reasonable care, and just say we're not engaging contractors via PSEs anymore. And I think if you had a client who felt 90% of their contractors were likely to be deemed employees, then that's probably the obvious business decision to make, to go down that road and just sidestep this whole tricky area of assessment and whether or not you take reasonable care. Again, going back to 2017, some much publicised criticism of NHS Digital, who'd taken the approach of using check employment status tool and then had a walkout of contractors, then moved on to use an alternative arrangement, try and get people outside, and now have been sort of further attacked by HMRC as to whether or not they took reasonable care when they were using the assessment tools and put the honest information in. Maybe links back into Alison's point about hiring managers having vested interest in those assessments. So I think that's lent itself to a multi-million-pound backdated bill. So it's an expensive one if you get it wrong.
Yeah, okay. So if we look at how assessments are actually carried out, then you mentioned the HMRC CESS tool there. It's not without its critics, it's fair to say. But with that in mind, what are your current views on the current version of CESS, its reliability, whether it should be used by businesses to support those status determinations? Zoe?
So I think the problem with CESS has been well documented, but HMRC have said that they will accept assessed assessments. So people are obviously using them quite a lot. I think the big issue for us is that really, when you're looking at someone's employment status, you need to look at both the contractual arrangements and the working arrangements. And when you're doing just a tick box exercise on CEST, it doesn't give you the discretion to look at things in the round. So I am concerned that people, as you've identified, know what answers to give and give the right answers. And they're being honest, but they're not being fulsome. And I think you can end up with artificial responses. I mean, I think also, let's be honest, when you get to any grey area, CEST always says that it can't give a determination anyway, and those are the ones really where you want the security. There's a couple of specific problems with CEST. One is, I think, that it is missing that part and parcel of the furniture test, which has been referred to in case law throughout and is clearly very important. And where you have somebody who everybody thinks is part of the business, even if they are ticking every other box and could be substituted, etc., etc., if they are part and parcel of the furniture of the office or whatever, then it's very difficult to argue that they're not going to be treated as a deemed employee. And CEST doesn't really seem to pick that up. There are a couple of other questions where we have actually really tested this. If you answer if you answer one particular question positively, then you are automatically deemed to be outside IR35. But in reality, that is the wrong answer. Now, as I said, HMRC said they'll stick to it, but the minute they realise there's a mistake on there, there'll be problems in the longer term. And I think what I've seen is that contractors get to know those little nuances. They know what to answer, and therefore you need to be able to counteract that quite quickly. What seems to be happening with CEST as well is that contractors tend to come to the business and say, look, I've done my own CEST assessment. This is the answer I've got. I think I'm outside IR35. As a business, if you believe that they are actually inside IR35, you then really need to be able to have all your evidence lined up and able to rebut that. And so CEST can be quite unhelpful in that way, because I think you end up having to have arguments with your contractors where you don't accept the answers that they've given. I've got some clients who have insisted that managers complete the CEST questionnaire, but that they complete it with somebody from HR sitting next to them, so that you get continuity across the business as to how you answer certain questions. Because as we've all identified, managers may not may know what answers to give, or also may not know the general policy of the business more widely. So to the idea that when you're answering any kind of questionnaire, not just CEST, you need to keep the managers honest. Sounds like the managers are deliberately playing it. That's not what I'm suggesting, but just make sure that you're answering them consistently. So I mean, I do think that CEST is useful almost as a check after you've done your real assessment, and certainly you need to be able to respond to any contractors who've done their own CEST assessments as well. But I certainly don't think it's good enough to be the only way that you're assessing the employment status of your workers.
Dan, anything to add to that?
Yeah, I think as Zoe finished up there saying, our experience would be that actually you see a lot of businesses using CEST as a starter for 10 and then actually adopting a secondary assessment as well for comfort, because I suppose if you can get an outside decision and you've answered CEST truthfully and honestly, then HMRC has said they'll stand by it. Therefore, that should give clients a level of comfort. But then when you move into those more tricky areas, and perhaps that, as Zoe quite rightly pointed out, about 15 to 20% of the time, unfortunately, unhelpfully, CEST comes back saying undecided, then that may well be when you'd start to look at some of the other commercial assessment tools that are available on the market. Again, I think those other tools we've seen, we've seen a number of them. We partner with a number of those businesses if clients are keen to explore those options. They are certainly a lot more thorough in the nature of the questions that they'll ask. Some of them will certainly try and address mutuality of obligation, which is clearly missing from CEST and is the root of a lot of the criticism of it. And they'll come out with a determination. And some of them will then move on to actually say, not only if we can give you that determination to say outside, then they'll start to look at, providing insurances, for example, which we don't really know how strong that offering will be, and we'll see in the years to come if that's challenged and whether that bears fruit. But you can understand the client being attracted to looking at perhaps some of that insurance option there to give them a little bit more comfort. I think the other thing on assessment services is CEST is quite manual to use, and quite like the idea of a collaborative assessment. So even if CEST being used, someone side by side, the hiring manager, I think that's great practice. Again, some of the commercial models, they're built on a collaborative basis. So actually it'll ask the contractors to complete some responses. It'll then also ask the hiring managers to complete as well. So if that's recorded there and you can see that everyone's had some input, then that obviously potentially strengthens the argument for reasonable care. Also, where clients have got quite large populations, quite difficult and time consuming to do a really large contractor population via CEST. So again, some of these other tools that are available in the market will allow, due to the nature of them being online and software based, will allow large quantities of contractors to go through that assessment and to be able to give a steer to the hire as to what that risk looks like. CEST's kind of limited in its responses. It'll either say you're inside, you're outside, or it's undecided. Some of the other tools that we've seen actually have a bit more of a sort of grade to it, sort of red, amber, green sort of approach. So you get kind of sense of where people are in that spectrum if a hire is wanting to look at that level of detail. So I think, HMRC have said you don't have to use CEST. I think my advice would be, why wouldn't you if HMRC have said they'd stand behind it? And some of the criticism of the other tools would be, or the clients that choose to use those would be, well, you're looking at using an alternative because it's more likely to give an outside decision than an inside. The reality is it doesn't matter which tool you use, just make sure that the information you're putting into them is accurate, and therefore the result can be accurate, and it's something that you can stand behind and clearly keep records of everything that you've taken through that process if you're ever challenged.
Yeah, I think the documentation and the consistency of process is vital, because then you can demonstrate that reasonable care, and if you've been thorough, then that takes you a long way towards having a rock solid process. And anything else to add then about the other third-party offerings? I mean, you've mentioned that they are there, that there are some with insurance attached.
I think it's for a business to sort of, again, it's back to my point earlier on in the webinar, which is around your attitude to risk and cost. If you're a business that's totally risk averse, then you're potentially going to sidestep this whole question. If you've got actually you want to be more dexterous in your approach, and you accept that there's some contractors within that population that genuinely look like they probably are contractors, then you need to use the assessment. That's the right thing to do. Contractors, that's also a difficult one for a contractor to swallow, I suppose. If the client goes back and says, actually, we've made a decision not to assess, we're just not engaging PSEs anymore, that's obviously going to be disruptive to a contractor and not necessarily put that client forward as the most attractive client out there. Clearly, if you're a bank, then there's a bit of a pull there anyway. So a lot of hires will have to think about, being fair and doing that assessment and taking the approach. On the insurance point, I can understand why people may be attracted to it. So the way we've seen it operating in the market is that the cost of the insurance product can be picked up by the fee payer, which is either the recruiter or the hirer if the contractor is engaging with the hirer directly, or it could be picked up by the contractor, but ultimately the liability only ever sits with the fee payer. So interesting, clearly contractors will be happy to pick up the cost of insurance if that means they can continue to work outside of IR35. So I think that's an interesting dynamic. You'd have someone paying who's not necessarily carrying the liability. But in terms of the documentation that we've seen, and the insurance companies that are backing it are substantial insurance companies, well-known names. So you wouldn't think they'd be walking into cul-de-sacs if they're prepared to put an insurance policy in place. Just wonder what HMRC's view on insurance-backed IR35 assessments would be. Potentially, you'd have thought HMRC would want to challenge those quite early to see if they're robust and they'll stand up to scrutiny. Otherwise, you could well see the market, that market would take off and everyone would use them. So I wouldn't say everyone's doing assessments that are insurance-backed, but there's definitely some interest to it. And my recommendation would be consider all the options that you've got available and make a decision as to what's suitable for your business based on that sort of cost and risk scale that we're talking about.
thing I would point out on that, though, and I think this is one of the issues I've identified right at the beginning, is who owns this risk in the first place. Because I think that financially a financial risk isn't the same as a tax risk. And yes, there's going to be a cost to bear, whether it be the insurance, whether it be the tax, but from a tax department's perspective, and I do know that tax departments are often not hugely involved in IR35, if there's non-compliance, that affects your rating with HMRC. So non-compliance on IR35 or HMRC, considering that you've not acted reasonably when you've done your assessment, will affect the way HMRC will look at you more widely. It might affect, it might make you more likely to be subject to a PAYE audit, but it might make you more likely to reduce your general rating with HMRC as well. And I think that disconnect between people making risk-based decisions and cost-based decisions and not necessarily feeding into, or the tax department not necessarily being a part of that, is quite a big issue in some organisations.
Okay, so moving on down the process a little bit then, let's now explore some of the principal solutions you've seen businesses adopt for contractors once they are deemed inside. Alison, perhaps you'd summarise for us the key options and the legal issues once we get to that stage.
Yeah. I mean, it's a relatively narrow set of solutions, I would say, for people who are assessed as high risk of being a deemed employee. The first one is kind of perhaps the most obvious. If this person is a deemed employee, make them an employee. So you've got the client effectively entering into an employment contract with the individual. PSC is taken out of the equation. They're put on the payroll. They get all the benefits that are offered to employees of that organisation. They get all the statutory rights that are associated with employment, which include, holiday pay, pension, all the kind of caps on working time and so on. Rights not to be unfairly dismissed after 2 years of service, and all the sort of family-friendly rights that you get as an employee, maternity leave, paternity, etc. Obviously, that's the highest cost option potentially for an employer, and in terms of legal responsibility, it is the most onerous. But if you've got someone who's very important to the organisation and to all intents and purposes is an employee, that might be a sensible solution. A sort of slightly lower cost and perhaps lower risk for the end user approach, and one that we've seen adopted by a lot of organisations, is putting people on a PAYE payroll, but outsourced to a third party. So you've got an employment agency or an umbrella company that employs the individuals or engages the individuals. For the end user, legally, the individual is not their employee. They don't have any obligations to them. They just pay the fee to the agency or the umbrella company. And it's that entity that's responsible for honouring any employment-related rights that individual may have. From a legal perspective, it is worth remembering that after 12 weeks on a particular assignment for a particular end user, the agency workers regulations kick in and require the agency worker to be provided with certain terms, including pay, working time and holiday entitlements that they would have received if they had been engaged directly by the end user as an employee. So that is something just that is sometimes forgotten and can push up the cost associated with engaging agency workers. The other solution that we've seen for people who are assessed as high risk but who are perhaps borderline is making tweaks, for example, to the contractual arrangements to take them outside of IR35. So, for example, you've got someone who's paid by the day. If you change the arrangement so that they're paid based on their output, paid according to deliverables, and that tips them back over the edge into genuine self-employment, then that's potentially an option. But I think it's really only for a very small handful of contractors that most businesses are likely to be able to do that for. If you're having to make wholesale changes to someone's working arrangements, that is not an option because, generally speaking, those changes are difficult to sustain unless it's really minor tweaks. So I think those are the kind of the key options really. What we haven't seen is businesses putting PSC contractors on the payroll or planning to do that. That's kind of not something that that is kind of viewed as a sort of viable option really.
So I was just going to just adding on to that. I think again agree with everything that you said there, Alison. I think you're right. If it's borderline, then you could potentially look at trying to change, review the contract terms, and but more importantly, probably working practices. And it may be that some tweaks there will get the right result for everybody concerned. But as you say, in practice, trying to move someone onto a sort of statement of work type approach where someone's getting paid on deliverables is sometimes not practical. But there's definitely a lot of talk of that in the market. It's famed as the silver bullet. If businesses can move from engaging people on time and materials and move them onto a statement of work approach, then there's no reason why that can't work if it's done properly and workers are not getting paid on continuing to get paid on a daily basis, but actually getting paid based on those deliverables. I think that's an option for people to look at. I think outside of that, though, once you've got workers who are deemed as employees, and you need to consider what the payroll options are. Quite right to point out, a client could take them on directly. A recruiter may look at taking them on directly onto their own PAYE. But none of us are probably surprised to know that there is very, very little appetite across, from what we see for sure, across clients or across recruitment businesses to be taking people on as employees, because there's risk associated to it. There's operational cost and there's administration. I mean, you just have to look at this year with furlough, for example, to highlight what those risks can present. So we see mostly clients still looking at outsourcing that and passing that off to a third party, like a business like ourselves, like an umbrella company or a recruiter, as you've said. Because there's a reason they're engaging contractors is because they're onboarding and offboarding on a regular basis. It just lends itself to be a sort of separate contractor payroll as opposed to them actually going on as straight onto the books of that employer. Then looking at the sort of different payroll options that are available out there in the market, we've talked about umbrella a couple of times. I think that will be the mass. I think 70–80% bulk of the market that are deemed inside will shift to umbrella companies. It's absolutely what we saw happening back in March. We were very, very busy with queries and inquiries coming through. We expect the same for Q1 next year. You do also get some contractors who want to retain their own limited company and continue to be paid into the limited company, but actually with the taxes being deducted from HMRC. I'd say roughly 10–15% of contractors we see wanting that option for a few reasons. One may be that the IR35 looks at an assignment by assignment basis, so they may well be deemed inside on this piece of work, but they may have other work that's deemed outside, and therefore they just want all the money processed into the PSC so it can be managed centrally. Certainly thinking back to 2017, we saw a number of contractors who were quite aggrieved with these deemed inside decisions and sort of understood that if they are to move to PAYE with a business directly or move via an umbrella company, kind of all bets are off then. There's no recourse for them claiming back this overpayment of tax because they're now in an employed model. So some of them who really want to sort of take that argument forward will want to continue to get paid into their limited company, because then they can make a claim back for this, what they view as an overpayment of tax that's been deducted by the fee payer and paid off. I think in the main, most of those arguments kind of dissipated over time, but there were certainly a few contractors that wanted to take that forward. I also think the accountants, there's a lot of accountants out there advising contractors to retain their limited companies, which you may not necessarily view as good advice, and you could be a cynic and say that's because they're looking at trying to protect their accountancy fees. So I would recommend to businesses, if you've got deemed employees, offer them a couple of options. Offer them an umbrella arrangement, offer them a deemed arrangement. So a business like Giant or there are other payroll companies step into that chain, act as the fee payer and do all this payment off to HMRC. In fact, I think I note a question from one of the audience members around what's the best systems to pay. Speak to your payroll software companies, see if they'll offer it, but actually trying to pay an invoice type approach, account payables approach, factoring in PAYE and national insurance is quite quite tricky. So speak to your payroll software, see if they can do that. If not, you could simply outsource it if you wished. And I think the final payroll option that I wanted to mention, which seems to be getting a excuse me, a big head of steam up in the market, is something called a PEO, Professional Employment Organisation. At Giant, we've been doing that for a number of years for some corporate clients, but it's a model you tend to find much more in the US, but it's now starting to really take a hold in the UK. It looks very similar to Umbrella, so the PEO business engages that worker on an employment contract or a worker contract for services basis. The key difference is that on the PEO, the contractor is told up front their PAYE rate. So they get a wage slip that would look similar to all of us today who are employees of our businesses, simply a PAYE rate with PAYE and employees and I deducting it. It's very simple, very straightforward. Separately, then the PEO will invoice the hirer or the agency or whoever they're engaged with for the employer's costs. So none of that cost part is visible to the worker. When you look at an umbrella arrangement, all those costs are visible, so the contractor can see the money that's being sent to the umbrella, see the margin that's being deducted, see the employer's costs that are coming out, and that can be viewed two ways. One, you could say it's more transparent because the worker can see everything that's taking place, but for some contractors it confuses them a lot. So when we start looking at good work plan and the Taylor review and everything that's that battleground of bringing tax and employment together, one of the key recommendations from the Taylor review was transparency to workers on the real rate of pay that they're on. And a lot of that is because umbrellas are criticised sometimes for not being clear and not fully explaining what happens when they're engaged and where the money is going. So PEO kind of cuts through that because it's a simple PAYE, but it gives that client or that recruiter the option of having it outsourced rather than them taking it on their own books. But in the end, all roads lead to the same position, which is PAYE for HMRC. It's just, which road does someone want to go down? I think the vast majority are probably going to head down the umbrella path, at least in the next 6 months.
Yeah, I think, sorry, Zoe, you're right, Dan. I'm coming to you now, Zoe, because I can see you're itching to go. But the majority of contractors probably will go down the umbrella route. Umbrellas don't always attract the best of publicity. Are they a good idea or a bad idea, Zoe?
I was just going to say, because Dan
I know you were.
Dan and I have talked before about some of the the bad reputations that umbrellas have in the market, and I think there's definitely, especially actually during the pandemic, there's been a lot of focus on umbrellas promising all sorts of things to nurses returning to the NHS and things like that, and I think HMRC have produced all sorts of PR things saying if it looks too good to be true, it probably is too good to be true. But I think there is a degree of nervousness because there are some unethical operators out there, and we really need to watch out for that. And the other point as well is that there are also umbrellas who seem to charge workers to employ them rather than charging the end user. And again, that's the lack of transparency on costs. So there are a couple of real kind of bumps in the road to look out for when choosing which umbrella organisation to use and to outsource if you are an end user.
Dan, as a director of an umbrella company, a very ethical one, I have to say, what would you add to that?
Well, we would say that, wouldn't we, that we're ethical, but we absolutely walk the walk and talk the talk. I think, listen, our sector is the same as any other sector. There's the good, the bad and the ugly. It doesn't matter whether you're operating in law, whether you're operating in financial services or in recruitment for that matter. So often people can get tarred with the same brush. For me, most of the time when I see these non-compliant models being spoken about, they're not umbrella companies anyway. They're actually offshore schemes or loan arrangements, which is not what I recognise as an umbrella. So I think, unfortunately, umbrella gets bandied around as a catch-all term. It just basically means third-party payroll provider, and that's where the sort of the stink can stick to others. I think it boils down to basic procurement. So any client should be taking basic procurement steps when they're looking at a supplier being engaged in their supply chain. Look at the reputation of the business, look how long they've traded for, look at the financials, how strong is that balance sheet. When you're looking at this redraft of IR35, you're very, very clear that the risk can move up the supply chain if there's a failure further down, maybe by a business folding. So I think, and when you look at the non-compliant providers, that happens continuously. So they'll phoenix and disappear and reform as a, you know, with another badge on the front of it. So looking at picking a payroll business that's been there for a long period of time, I think is an absolute must. There are trade associations out there, such as the FCSA, that have some barriers to entry within it. So, for example, with the FCSA, we're a founder member of it. It's got about 84 different members now, so it's quite a broad church. But you have to go through audits with the likes of EY or Safaris and other accountancy firms, and they'll come through and do a desktop review to ensure that our wage slips tally up. They can see the RTI payments being paid off to HMRC. The onboarding process is correct, and there's a full explanation to the worker as to how it works, where the deductions are taking place. So I think that's a level of comfort, I'd say, is a starter for 10. And I don't think clients should have any issue with mandating down to their supply chain which payroll, you know, umbrella companies should be appearing there. And we saw a lot of that last year. Because the problem can be sometimes for a client, once the money's moved down to a recruiter or whoever else is in that supply chain, they've no awareness of where that money then goes and who's engaging. So we saw a lot of activity where hirers were mandating the use of a very narrow PSL of umbrellas just to give them some certainty. And I think to one last point with Zoe, she talked about deductions being taken from the worker directly. Well, I think that's basics boiling down to a poorly drafted umbrella contract that's not been done correctly, because the contractual arrangement with a vanilla umbrella, as I would see it, is the umbrella company providing services to that hirer or to that recruiter, and those costs then come down and a margin is taken on that basis. It should be very clear that once that money's taken, the amount left over is the gross taxable pay of the worker, and that is the legal amount that a worker is then paying tax upon. But again, you know, the devil's in the details. So I think as a starter for 10, people should look to the market and stick with the established players that have been there for some period of time to give a level of comfort, and do full due diligence, ask some questions, and make sure you've got assurance that you're engaging with someone who's reputable and is not going to cause you a bigger risk. Because frankly, there could be much bigger risks for hirers in engaging with the wrong payroll companies outside of IR35. You know, IR35 is one part of the risk, but there's a whole broad range of risks we could talk about, which is non-IR35 related if you get the wrong payroll providers in there.
Thank you, Dan, and thank you, Zoe and Alison, so far. We've received a number of good questions from the audience, which I'd like to address now. Just before we do that, can you please re-answer the poll on the screen, given that we've been through this scrutiny so far, and tell us how you now respond. That analysis will follow as we complete the questions. So our first question from the floor then is one I'd like to put to Alison, and it is, could a business just take the PSC out of the equation and get around the off-payroll rules by engaging the contractor directly on a self-employed basis?
Theoretically, yes. So you can take the PSC out of the equation, and that does take the contractor outside the scope of these off-payroll working rules, but in practice, you've still got someone who's a deemed employee for tax purposes. If you're engaging them directly, they'll be an employee for employment law purposes as well. The tests for employment status for tax purposes and for employment law purposes are pretty much the same. So not a real option, very high risk, and no, not advised.
I'll just add to that as well. I think within CES, included within that is whether or not you're engaging someone as a sole trader. So obviously, what comments today have all been sort of PSE related, but if you're engaging somebody as a sole trader, you as a business should still very much be taking the exact same approach on tests. You know, just because you're engaging a sole trader, you need to understand if it's employment or not. And real life examples, I've seen large populations of contractors in the sort of news and media space that are engaged as sole traders, and there's been a lot of activity from HMRC around that. So yeah, I'd echo what Alison said. I don't think it's a solution to just get rid of the PSC. In fact, if anything, it probably makes your risk higher because you're engaging directly.
Okay, and another one about PSCs, and this is about the visibility of the supply chain, which is now obviously much more critical than it used to be. How do you actually determine whether an intermediary is a PSC within the scope of the rules? It might not always be apparent.
Yeah. In most cases, it's clear. You know, you've got Zoe Feller, the worker, and Zoe Feller Limited, the company. But the legislation actually places an obligation onto the worker on the worker to notify the client of whether the service providing entity is caught by the rules. And if they fail to do that, that service providing entity is effectively deemed to be an intermediary for the purposes of the off-payroll rules. So it's in their interests to tell you as an end user if they're outside the scope of that definition of an intermediary. And there's also some kind of anti-fraud provision that it shifts the PAYE obligation onto that PSC if the client has determined that they're outside the scope of the off-payroll rules as a result of fraudulent documentation supplied. So there are some kind of some safety nets in the legislation on that.
Okay, and a great question here now. This is something that didn't happen in the run-up to last March, and we all wish sincerely it didn't have to, but here we go. Do we think that the pandemic will have an impact on how contractors are assessed, especially given that everyone is now subject to less supervision and control, working from home and so on? Zoe?
So I think that's a really interesting question. I think that it can have two different effects. I think that given that everybody is subject to less control, there is an argument that you need less control in order to be a deemed employee, and therefore taking a conservative approach, you might worry that many more of your contractors are actually going to be treated as deemed employees. The other argument is that control just becomes less important as a factor in determining whether or not somebody is within or outside the scope of IR35. I think the pandemic will have changed the nature of contractor relationships with end users anyway, and therefore I would be recommending to my clients that they revisit assessments they've made this time last year and look at those contractors again this time this year to see if those working arrangements have changed materially over the last 12 months.
If I can just add into that as well, just in terms of sort of COVID and the impact of what we've gone through this year. I think if I think back to March when the postponement came in, which was quite late in the day, we're in the middle of March when the postponement was announced, and clearly contractors and the industry generally were pleased with that postponement. It meant business as usual could carry on. But very rapidly, in the space of a couple of weeks, I think it became quite clear what the impact of the pandemic would be, and actually contractors started to look more like they were just keen to make sure they could keep within assignments. So when you start thinking about this, again, back to this risk and cost approach and the negotiation that might take place with workers who are potentially deemed inside and costs, you know, that landscape may have shifted a little bit to be more client focused, not everywhere, but I think that's certainly one angle. I think also as well, what the pandemic has done in the fact that we've all started to look at working from home is really opened their eyes to a lot of hirers as to what a flexible workforce could look like. So I think longer term, it will be interesting to see. I've had plenty of questions around whether or not I think contractors' populations will fall or decrease as a result of COVID and IR35. And there's been a lot of doom mongering, as there tends to be all the time when there's changes in this part of the sector. My view is absolutely on the macro, contracting will continue to increase. Businesses are looking for more agile workforces. And so I think, you know, the working from home piece also adds into that sort of mush. But what is important is that government need to keep focused and drive this disparity between tax and employment law and really try and bring some clarity into it. And then the market will fall in line. So quite a lot of interesting dynamics going on, but I think freelancing and contracting is here to stay and probably grow. If you look at the US, I think about 50% now of the US economy is on a contingent basis, and generally speaking, that those trends follow into us, and then Europe tends to follow off the back of the UK. So our view is that contracting is here to stay.
And sorry, just one point to pick up on that mutuality of obligation point, where businesses felt that they had contractors that they needed to look after in the pandemic, and therefore they made sure they were offering them work. Obviously, that does imply that there is a mutuality of obligation, and therefore that they're much more likely to be deemed employees. And I think that doing the right thing during the pandemic may have longer term consequences as a result.
Okay, well, with just a few minutes left then, we got a great question here, which helps to bring all this together, I think, and perhaps a final word from each of you. Can we just summarise the risks to all parties in the supply chain, looking at end users, agencies and contractors? A few words on what we see to be the real issues to be addressed here. Do you want to pick that up, Dan?
I'll go first. Yeah, sure. I mean, there certainly is a lot of risks. I think the risk to the hirer is reputational risk of getting it wrong, but also risk to business continuity by getting it so wrong that contractors don't want to stay. So, that's the easy fix is to pour more money into it, as I've said several times, but that's clearly not the solution for everyone. So I think the hirer's got risk. I think for the contractor, there's certainly the risk, I think, is, I would feel aggrieved as a contractor if a hirer made the decision not even to entertain looking at my status, although I can understand it from the hirer's perspective. So I think if that be the case, then contractors need to then start to look at the terms and really assess themselves and be honest with themselves as to how business critical they feel they are for that client. And if that's the case, then obviously that would lend themselves to asking for a rate increase if you think it's appropriate and having that conversation. I would impress on hirers absolutely to be making these assessment decisions quickly. So if you want to retain that workforce and keep them engaged, then let's not delay that until sort of February time of next year, and for it to be a big panic in 6 weeks of trying to get this straightened out. One of the benefits of the postponement is that we've been given a bit more time, so make use of it, start looking at it now. And there's the risk for me, key risk is the risk of wasting time and not dealing with this now and letting people settle into it before April the 6th next year.
Zoe?
I completely echo Dan's comment there. I think that the biggest risk is leaving things too late and underestimating how long it will take. Even businesses that were ready to go when the plug was pulled back in March, I think need to be able to reassess their contractor pool and look at whether there have been any changes, and also work out what they're going to do going forward. Employment patterns have changed hugely over the last year, so I wouldn't take anything for granted, and therefore it's about giving yourself the maximum amount of time to get things sorted.
Alison.
Yeah, I mean, I would echo what both of Daniel and Zoe have just said. I think, it's been a year now, and I think a lot of businesses did just drop everything when the delay was announced. And some of those businesses had not got that far along their compliance journey. And I think, obviously there will have been plenty of other issues, not least HR related issues for them to deal with over the last 8 months or so, and I think now is a very good time to start looking at that. I think Christmas probably feels like a bit of a mental barrier, but once you get into January, there really isn't that much time left, so it's definitely worth picking it back up now. Good.
Okay, thank you. Now, I know everybody's dying to know, and particularly the speakers, I'm sure, how did we get on with our poll? So here we go. At the beginning, we had 71% of people who were reasonably confident they knew what they needed to do here. That's moved up to 75, so that was that's good. And the real benefit of free consultancy here, we had nobody who was very confident, and we now have 8% who are very confident. So so well done, guys. I think you've done very well there. Just a slight sort of drawback on that is that there were 29% who weren't confident at all. That's still 17%. So For those of you who really don't know what to do next, we will be sending you the details of these good people who've spoken to us today. So thank you all. That was very good, and thanks for that. You all for your help. We enjoyed it. We trust that it's been interesting. Goodbye from all of us, and we will be in touch with a follow-up short questionnaire on how we've done. Contact details for the speakers, as I said, and thank you from us all. Have a good day.
Thank you.
Thanks.